Alright, so in this video you're gonna find out whether you should or should not trade one-to-ones. I personally think that this video is gonna make a lot of people actually get the first payouts, get to that profitability, because one-to-ones can actually be a huge game changer, and in this video you're just gonna see why. So first thing of all, you can see on my screen right now, which I'm gonna show you, why am I qualified to talk about this? Because I'm consistently pulling profits from the market. You can see straight away, this is my live account. You can see all the profits right there in front of you. Also, you can see all the trade recaps, live recordings, everything on this channel, which is called Nico Trade Recaps. You can also find it down there in the description. But this is the reason why I sit here and talk about all of this, because I feel like I know what I'm talking about, because I'm already in this industry for so long. So let's just get into it. Alright, so let's first go over all the goals that we are going to go over in this video. So understand what works for you, because for somebody one-to-one can be a great thing, but then for you it can just be something that is not worth it. But trust me, you gotta stick till the end to actually find out, because this changed the game for me and for a lot of other people, because it's important for you to understand how risk rewards are functioning. So second thing that we are going to go, and that you are going to know by the end of this video, is all the upsides, all the downsides of targeting one-to-one. Also, for some of people who don't know what one-to-one is, which I don't think anybody is, it's just targeting one-to-one risk reward, which is just having the same size stop loss as your take profit. So let's go on the third thing that we are going to know by the end of the video, and it's actually what to do every day in the market. So these are all the things that by the end of today's video you're gonna have figured out. So let's go first over the most important thing. So I need you to right now sit and try to focus as much as you can. So I put on my chart right here, one-to-one risk reward is this chart right here, and on the right we have one-to-two risk reward. So that means that if you are risking $100 and you are just targeting $200, then one-to-one is just risking $100 and targeting $100. So what did I draw here? So here I drew basically what can we expect from targeting one-to-ones and targeting one-to-twos. So I'm going to show you all the examples. So one-to-twos doesn't mean necessarily one-to-two, but if you want to think of 1 to 5, you can also think of 1 to 5, 1 to 3, 1 to 10. It's all the same thing. And yeah, let me show you what the one-to-one is. So look at it right here. This is your PNL, like daily PNL or something like that, like your trades in normal of which trades you take, and this is how the one-to-one is going to function. So we assume that both of these systems are very profitable, both of the strategies are profitable, and this is just how the PNL is going to actually look. So if you look on the chart right now, you can see that we are starting in zero. We experience one loss, but then we experience one win, and we are back at break even. So we are always going to lose same as we win. And what's good with that is that we are going to consistently win because we are targeting one-to-one. But then also a bad thing, if we like have a streak of 2 to 3 losses, which can happen and does happen sometimes, it's just going to be a little bit harder for you to come out of those losing streaks. So the point is going to be, after we lose a trade, we need to make it back with a win, and then of course we just continue winning until we get a loss. Then we just come back from it, and of course if we get like loss streak of 2-3 trades, we need to win 2-3 trades to make it back. But trust me guys, with one-to-ones there's gonna be the least amount of losing streaks. And why is that? Because look at this on the 1-to-2 risk reward. This is how the chart is gonna look. It's going to be either same as profitable as one-to-one, so it's going to make you same amount of profits, or it is even going to make you bigger profits. So the logic behind it is very, very complicated, but the thing is that one-to-one is maybe going to make you little bit of less profits on the long run. But look at the curvature. So this one is maybe experiencing 1 to 2 losses here and there, sometimes like maximum of 2 to 3 losses streak. But then on the 1 to 2 risk reward, you gotta hit some stop losses before you get that 1 to 2 risk reward. And if it's bigger risk reward, like 1 to 5, you're sometimes gonna get like 4 to 5 losses in a row before you get a win. And the point with that is, for example, look at this. When we get a loss here, when we go to -1, we just gotta take another trade, then we go back. But when we try to target bigger risk rewards, not necessarily 1 to 2, we go from 0 right here to -1, so we got 1 loss. Then if we are targeting that high, we experience another loss, and then another loss. So loss streaks are going to be guaranteed way more times. And what is the hard thing about loss streaks? So when you lost 3 trades in a row like this, it's gonna be hard to take the 4th one. So if you want to trade high risk rewards, you gotta be way more stronger in your head, because when you get like, I don't know, like 4 or 5 losses in a row, like you gotta come there and you gotta take the 6th trade that can also lose, and you gotta like be really prepared for it. And then the good side of high risk rewards, if you see right here 3 losses, got paid back even more with 2 wins. So we even made profits with 2 wins. So that's the good side of targeting high risk rewards. And then of course the bad sides are of course bigger losers, and not bigger losers but bigger losing streaks. And that's gonna be hard thing, because when you like this, look at this, when you go from, I don't know, 3 risk reward that you made accumulated over the month, and you lose 3 trades in a row, you go back to 0, and now your mind is gonna be like, oh, I lost so much, like is this working, is everything perfect, like do I gotta change something, should I stop taking a trade? And then look at this, AW happened, and what if you missed it, and then after that happened a loss, so you just got 4 losses in a row and you don't know what to do. So basically what we learned right here is that 1 to 1 is going to be way easier on the psychology, and 1 to 2 is just going to be a little bit more stressful. Not necessarily 1 to 2, but 1 to 3, 1 to 5, 1 to 4, 1 to 10, 1 to 30. It's all just going to be way more stressful on you, and they just, if you want that in the market, you can do it, of course. Upsides and downsides of 1 to 1. So you probably already figured some upsides and downsides. The first one, it's very easy to execute psychologically. So all you need to do is just come to the chart. You're gonna have high win rate, because I know how it is. You're gonna have very high win rate. You're not gonna get into that much of losing streaks. So the outcome of that is very hard to lose funded accounts, because if you go through, maybe if your biggest losing streak is like 3 losses in a row because you're targeting 1 to 1, that's not gonna hurt you very much, because you can lose like 10 times on funded account. So basically that's gonna just be pretty easy to execute and to not lose accounts. And the bad thing is that winners are same as losers, and so it's gonna be slow and steady profit. So when you lose a trade, you need to win a trade to make it back to 0. So it's just gonna be slow and steady profits, but that's actually how the trading should feel like it should be slow and steady. So it's not gonna be any like rushes like you're in casino or something. It's always gonna be just slow and steady to the upside. So that's why I really like 1 to 1, because it's not gonna be some kind of rampages where you just win 3 trades, make 20%. Like, it's always slow and steady, which is the point. And probably the last thing that is very important is for you to know what to do every day in the market. So you first of all have to think about what kind of person you are. So whether you want to be easy on your psychology, whether the psychology is messing with you, which means the good thing is going to be to go with 1 to 1s. And then if you're maybe some kind of stoic person or something like that, like stronger mindset person, you can go with higher risk rewards. Like, you can just hold the trades, not give a shit like whether it goes up or down. Like, you just hold it and yeah, till it hits the TP or stop loss. And if you're not sure what to trade, I'm going to show you some examples on the chart so you can see actually how that's looking in the real market. So I'm going to show you how the 1 to 1 is going to be outcome and how 1 to 2 is going to be in outcomes. And also, before I actually continue with the video, if you guys like the effort that I put into this presentation, you guys can leave a subscribe and like. That's just going to help me like continue doing these, and just let me know that you guys actually like these videos. Alright, so on the chart I have wrote some of the trades that go by my strategy and that are really good. So you can see this is like a week worth of trading right here. Yeah, like 7 days. So let's start with the first one. So we can make some kind of, how do we do that? We can make some kind of like anchor text. Alright, so I made 1 to 1 and 1 to 2 right here. So let's start with some of my first trades that happened this week of price action. So these are all swing trades. After this video, if you want to actually learn how I swing trade, how I achieve insanely high win rate, you can just, I'm gonna pop some videos up there and you can just go to my channel and watch some of my other videos. So let's see the first trade. So the first trade we entered right here off of the inversion of the fair value gap. You can see us perfectly hitting one risk to reward, and then after that 2 risk to reward. So for 1 risk to reward strategy, we are going to be 1 R in the profits, and for 2 risk to rewards, we are going to be 2 risk to reward in the profits, which means 2% in the profits if we risked 1%. Second trade, let's see it. So the way I would manage trades, and the way I think everyone should manage trades, is go break even after a certain point. And what I'm gonna do for this kind of video, for this kind of presentation, is I'm going to go break even for 2 risk to reward after we hit the TP on the 1-to-1. So for this example, you can see 1-to-1 hit the TP perfectly. Then if we go break even on the 2 risk to reward, you can see we came to like here and then reverse back to the stop loss. So 2 risk to rewards stays the same, but 1-to-1 is a W for this one, so we made another 1% right there. Right now let's go over the third example, so you can see inversion of this one right here. This one was inversion of that one right there. And if you look at the chart, you can see after we closed right here, 1-to-1 just spiked beautifully to the downside, hit the TP, and after that market reversed back to the break even and back to the stop loss. So for 1-to-1 it's gonna be 3 risk to reward, and for 2-to-1 or 1-to-2, oh my god, it's gonna be 2 risk to reward. So let's see what this trade is gonna do. So we have a trade right here, so you can see this one was almost potential long, but it didn't inverse both the fair value gaps. Then we have this fair value gap right here that got inversed, and we got set up to the downside. You can see both win, so it's pretty simple. 1-to-1 is going to just go up by 1, so it's going to be 4 risk to reward, and 1-to-2 is going to be also 4, so we also made a W right there. So it's for right now, it's tied down basically. And right now let's just see what this one did. So this one almost stopped us out. You can see came very close to the stop loss, but we always place it very logically, our stop losses. So this trade right here came close to the stop loss and then perfectly hit 1-to-2 risk to reward. So it's gonna be 5% on the 1-to-1, and it's gonna be 6% on the 1-to-2. So let's go further, and this one right here, let's see what happens. So market went to the upside, hit 1-to-1 perfectly right here, so it's gonna be 6 for this one, right, for 1-to-1, and then it hit break even for 1-to-2. So I think that's the week worth of price action, and you can see that in the end we got the actually same results. So actually we got the same results, but you could see how we differed. Like here we got W, then here we had break even, here we had break even, and on the 1-to-1 we got W. So like it's really a little bit different on the psychology. You can like feel it for now, but it's just up to you whether you actually want to trade 1-to-1s or 1-to-2s. But when you decide whether you want to trade some of these, you gotta stick to it. Like you gotta actually tell, I'm gonna trade 1-to-1s, and I'm not gonna just do one trade 1-to-1, another trade 1-to-3, another trade 1-to-1.5. Like you gotta stick to it, because that's how the strategy and that's how everything in the market is gonna play out, because you gotta stick to your strategy, to the rules, and in your rule it's gonna be how much you target. So you gotta stick to all of that. And just before you guys leave the video, I'm actually gonna give you something for completely free. So if you like the video, you can leave a like, subscribe, of course, as I told you guys, ask anything you want down there in the comments. And the free thing I'm gonna give you is actually down there in the description. It's actually my free playbook. So of this strategy that I've just shown you on the screen, that all the trades I drew are basically right here, that you guys also can watch another videos on my YouTube channel, basically where I just show you how to actually spot these kind of trades in the market. You can also claim that playbook down there in the description. So it's all like step by steps of what you need to look for the perfect setup in the market. So that's basically it. Like that's it for this video. I hope you guys enjoyed it, and I'm just gonna see you in the next one. Peace.